What's up, people? Welcome back to Invest with T-Claus. My name is Tevi, and this channel is dedicated to my investment journey, along with coverage on crypto, Tesla, Neo, Virgin Galactic, and ChargePoint. Come for the information and stay for the perspective. So earnings season continues with this past week, most of the mega cap tech companies reporting. Facebook, or now Meta, failed to impress when they reported a weaker than expected fourth quarter for 2021. The stock was severely punished with a single-day drop of 21.42%. I mean, that is huge. Do people think that Facebook is done for? Absolutely not. But this again provided a good enough justification for locking in an instantaneous 20% year-over-year gain for long-term investors, while the macro backdrop is still somewhat uncertain. On the flip side, Google exceeded expectations and reported a beat on the top and bottom line. That parabolic spike in the price is part of the reason why we're here today talking about them. So in today's video, I'll tell you what is behind that spike. I'll share how Google now fits into the crypto focus of this channel, and ultimately why it might be worth your consideration as an investment idea for 2022 and beyond. As always, I'd recommend watching all the way through so that you don't miss out on any pertinent information I'll be sharing. Drop the video an early like if you haven't already, and hit that subscribe button. Those are two easy ways to show your support to the channel and help it grow if you appreciate the content. All right, let's get into it. Okay, so we've talked about the macro backdrop quite a bit since the year started, as it seems to be primarily what is driving investor sentiment, and as a result, the market. You cannot turn on the financial news without hearing talk about the Fed, the 10-year Treasury note approaching 2%, and how that could spell disaster for investors, right? That all sounds scary and crazy, but let me just clear something up before we get into the Google news. The 10-year Treasury rate is the lowest it's been in the past 5 years. We peaked in October of 2018 at 3.21% before the market corrected, only to push significantly higher between January 2019 up until the pandemic hit in March of 2020. My point in telling you this is this: the market, or more accurately, professional investors, have seen significantly more stringent economic conditions, which have ultimately failed to change the direction of the chart these past 5 years, and frankly, generally speaking, since the market inception. And so quality companies will thrive and will be worth more in 5 years than they are now. So your exposure and risk should be based on the time horizon around your investment, and really, frankly, nothing else. And with that in mind, let's talk about why Google is on my radar now more than ever. I'll link the full earning presentation deck if you're interested, but what we care about is this. The reason the stock blasted up is because Google announced a 20-to-1 stock split that will go into effect right after the 4th of July holiday this summer. Now, fundamentally, a stock split doesn't change the value proposition of a company. That said, when a company enacts a stock split, it's basically sending a message to investors that they see strong growth ahead. Great examples of this are Apple and Tesla, and you can see how each one of those stocks responded to their respective stock split in 2020. So one could reasonably expect that as we get closer to the summer, we could see a decent move up in the Google stock price. And why would I think that? Well, consider this. As it stands, Alphabet, Google's parent company, has a mind-blowing $139.6 billion in cash and cash equivalents on its balance sheet, and only $14.9 billion in debt. So Alphabet has one of the cleanest balance sheets in the stock market, and when you consider that Google and YouTube are under the same umbrella as market leaders in their respective categories, there is really no concerns around growth. To put that last point into perspective, simply take a look at the projections for the stock price by year end. You have 30 analysts covering the stock and not a single hold or sell rating as of Friday's market close. And this is before fully pricing in the latest news. The current consensus places the median stock price at $3,500, call it, which suggests a little over 22% upside from current levels. The lowest expected price is $3,000 and $3,900 on the high end. Now, this is a little bit of speculation on my end and certainly not financial advice, but let's say that you bought 5 shares and we managed the upside scenario pre-split because of all the hype, right? That would be a roughly 30% gain. Now from there, the stock becomes more accessible to retail investors, and Alphabet is in a strong enough financial position that it can initiate some stock buybacks to prop up the price post-split as needed. So you reasonably could be looking at an additional 10 to 15% on top of that for a total of 45% gain for the year. Put more simply, you'd make $5,000 on a 15K investment if we hit $3,900 by summer. Post-split, you'd have 100 shares, and for every $10 gain, well, that would be $1,000 more in your pocket. So in short, the stock split and underlying fundamentals make a pretty strong case for Google. But if that wasn't enough, Google is now going to be pushing further into blockchain, crypto, and all things metaverse. Again, here, I'll link the articles if you want to go read them in full, but it's worth sharing a few key excerpts. If you recall last year, Google partnered with Coinbase to offer Coinbase cardholders the ability to pay via Google Pay, extending the utility and reach of the Coinbase card even farther. Further elaborating on the financial and crypto focus for Google, their CEO stated, and I quote, "So as a company, we're looking at how we might contribute to the Web3 ecosystem and add value." And he continues with, just one example, our cloud team is looking at how they can support our customers' needs in building, transacting, storing value, and deploying new product on blockchain-based platform, end of quote. 3 examples they gave for how Google Cloud is further integrating into the space is by supporting Hedera, which is basically a layer 1 protocol similar to Bitcoin and Ethereum. They also talked about Theta Lab for decentralized gaming, and Dapper, which is behind the NBA Top Shot NFTs. And one could argue that NBA Top Shot is one of the most prevalent mediums that brought NFTs into the center stage. The bottom line here is this: as the space evolves and becomes even more mainstream, this last point here will become extra critical. So if you're like me and you want to invest and capitalize on the next 10 plus years of growth that will come with the advent of crypto, blockchain, and NFTs, Google is definitely the company that you want to keep your eyes on. Plus, I'm on YouTube, so yeah, I have an additional vested interest in investing with them. But anyways, at the end of the day, this stock split is going to be a golden opportunity to increase your existing share counts and or find a good entry point if $3,000 was previously too steep of an entry point for you. The last one I will leave you with is this. Thanks to this brutal reset in January, quality companies like Google are basically back to square one for the year. And going full circle on the initial point I made, institutional investors are in the market to make money. Simply ask yourself, is there a world over the next few years where you can envision not using YouTube and Google in your daily life? Well, neither can I. So Google will make money regardless of rate hikes, future COVID variants, and election results. Therefore, capital will flow into the company and shareholders will be rewarded. It's literally that simple, purely from an investment vantage point of view. The rest is noise that sells the news. And on that note, I'll leave it here for today. Don't forget to drop the video a like if you enjoyed the content and share with others who you think could benefit from it. For my newcomers, subscribe and don't forget to ring the notification bell so that you stay in the know. As a reminder, I post every Sunday, and as time allows, I target one additional in-week video for more crypto-focused content. Thank you for watching, stay humble, hustle hard, and I'll see you in the next one.